Hello traders, this is the first recap video for the weekend update, the bigger picture one. As always, I'm going to start it on a DAX index daily chart, and we'll go through DAX and US indices on daily and weekly charts. Now, this is the usual DAX index chart, the one which I call a less complicated with fewer levels, and here we had some areas of interest. This is the chart given with the morning notes on Wednesday. As you can see here, this is Wednesday 6 a.m. and this is also the chart that I posted on X on that day. And on Wednesday, which was the up day, the only up day of this week, we had reactions from this first and second eye. Here later we had reactions here and here on Friday. Now let's observe those other eyes and what we are having here. First of all, this Friday candle made a spike below the Tuesday trend down day low, and as you can see, they closes here at 23,591, while this low here was 23,601. So basically they closed like 10 points below that at the level itself, we can say. And most importantly, more important than that, they closed above the March double top, which means that this wasn't a breakdown below large time frame level, but just a spring for now. Now, market do like to spike the large time frame levels, especially in environment of elevated volatility. The VIX closed this week at 29. Oil had a big spike. A dollar went up. So a lot of things are happening outside of our charts that we are accustomed to. You know, not everything is only on the index charts. There are a lot of things on other charts as well. Other things that are moving behind. And the thing is that this volatility is in short-term terms likely going to stay for a while, and that all markets do have some more room to the downside. And now if we observe this chart, let's go back with those eyes. This eye is November low. The November low was a spring low, because you see that what they did here. They just made a spring below the June low. This is a spring as well. And springs can be retested. Like this spring can be retested on the way down if we get a real breakdown below March double top, which is now more important for us than June high, obviously, on weekly charts. Now, second eye to the downside would be this one, and that is the gap between April and May. This is the only gap that is visible on a DAX index monthly charts. This is an outlier gap, and that's the second here thing of interest on the downside. Now, when we make a fib like this, thinking, okay, what if we got a bounce from Monday because of this close and because of this spring? You can see that 38.2 is under the daily 200, which is acting as resistance from Tuesday, basically. And when we speak about spikes, see the size of the spike above 24,265. You see the size of the spike below this level. You can see the size of spike above daily 20. And yet, when we are looking on a daily chart, we can say, and we are going to say, hey, daily 200 kept the upside. Yes, it kept the upside on a daily chart, while on smaller time frames there was still a spike above. And that is why we are having those large time frame references on our charts, which are zones charts, usually made on a 30-minute time frame, on medium time frames. We need to be aware of them, because when they make this and then go down, to understand, hey, this is just a false break, no upside follow through. And market went here through few phases of being too short on Tuesday, because we already had this true gap down and go behind our back on Monday, then another true gap down and go. So it was short term oversold, and we got a decent bounce on Wednesday, which is the usual thing because after the trend down day, number one scenario is bounce and consolidation. We got a bigger bounce almost to the high of Tuesday, but again, daily 200 kept the upside. Then spike above, the market was here too long. Then market in the afternoon on Friday was again too short, and there was some recovery or bounce in the US RTH session. Now the potential down, all the way down to this gap, you see that this is 11%. 11% from the all-time high. That's correction territory, but not like the world is crushing, everything is coming down. It's still like 10-11%. It is in the parameters of normal correction. Okay, so that would be DAX index daily, and this would be comparison with futures. I put a Bollinger Band there also to see that on this down moves, like for example, this was here November low, and on the up moves, that market can grind for days on the upper end of the Bollinger Band or for days on the lower end of the Bollinger Band. And if we observe now the tariff move from April, you see here several candles, and this is the thing where you suspect that there could be a bounce. This like candles that are completely outside of the Bollinger Band. This was also poking below daily 200, but it also, this area here had multiple confluences to be a support, and same was on the S&P and on Nasdaq. There is a video from April the 6th, a day before that bounce which happened on Monday, signaling and showing all of those areas. Huge Fib retraces from a monthly chart, and everything came together back then. So the question is where that could be now, where now everything could came together. Is this it? No? Because weekend is now, and anything and everything can happen on a weekend. So here this is questionable. Can this hold? Level was tested many times before, but we still could get a bounce. And to understand, hey, there is downside potential. If we now observe other markets, this is another chart of DAX, and here, for example, I circled this March double top and August 2025 low, and here market made just a small spike below that and went higher. Now let's go to these other markets, and this is S&P, and when we apply the 100% range expansion concept on the S&P, this could be the case of a move down into daily 200 and approximately 6,560 level. Now this here is something to observe. This is around 6,710, and you can see how market here bounced in front of the RTH value, while on futures they swept a bit below. There is always a small difference between index and futures, and you should be aware of both of them. Now this is Nasdaq, and this is the thing that they did here on the US market, like spring, poke, spring, poke, spring, poke, spring, poke, spring. Daily 200 also very close. It wouldn't be really a surprise to tag daily 200 on Nasdaq. Now let's move higher. I'm sorry, not higher, but let's observe futures first, and this is it. What I'm talking about, I showed you this day trade on Friday on PrivateX. You see this dashed line here, that's the alert. I want to know if they are going to tag this again, because double bottoms like this or double tops like this, which have a very small amount of time between them, are not really good, in this case, supports. This shouldn't be considered as a strong support. Market already bounced. Market already made a mini spring there. You see how Nasdaq futures are actually the back adjusted ones are actually riding the daily 200. They're touching daily 200. Plenty of days are they here. Dow Jones looking the most vulnerable, and this was the thing that we had this week on index and on futures on DAX, that they tagged here these previous lows and went down, and also daily 200 as resistance. Now when we go higher on a weekly chart, this is our usual DAX index weekly chart, and again there is no downside follow through below March double bottom. You need to zoom out to understand that potential. This here was a 7-month range, and with that low volume Santa rally, we had exactly 100% range expansion into the upside target. So that's the thing that we got here on the upside on DAX, and that's the thing that could happen here on the S&P on the downside. Now let's continue to observe these weekly charts. This is weekly S&P, and you see here, for example, when we go to weekly chart, then situation is looking a bit different, because S&P actually closed below the lower edge of a previous 7-week range and could go lower to the November low. And if we observe that kind of move, that's like 6.5%. Again, nothing earth shaking would happen if index goes down 6.5%. It's doable. And the same is, for example, for Nasdaq, which is looking the best out of those US indices. It is still in the range, and now this is a 15-week range because they made a spring, and it is the only index out of the US indices and DAX combined which actually had a green week. Dow Jones is looking the worse because it actually made a channel breakdown, and if you make a fib like this on April low, it wouldn't be really surprise, given the fact that the moves on the US markets are still rotational and the money just flowing from one kind of sector to another, that we actually could see this kind of 48.2 fib retrace down move here to this, and that would be the same like on DAX going down to that gap on the monthly chart. And another way how to look at DAX, let's go back to that standard chart. So this is our standard chart. This is the weekly logarithmic chart. This is a channel that is holding the price from October 2022, so for quite some time, and now the price is very close to the bottom end of it, and this here range would be on the weekly chart if we would observe it like this, including this from here, like this, like a wider one. That would be this here, and this here would be the classic bullish setup, marginal lower low on a weekly chart. So long story short, everything here shown have the potential to go down, but just note that on daily charts both DAX and S&P are closed above supports. Those first supports aren't really broken yet, and if on S&P would observe this December 17 low, you see that this was a spring below that, then that spring got retested on a Friday. So as long as they're making springs, you're not going to get a bigger downside, but those bigger down moves are the biggest and the fastest when something really breaks, and that still didn't happen on these markets. While back to DAX, let's go back to our more simple chart. Back to DAX, I still think that this is a potential over down move, and that here at the start of the week is going to be important for us, because there is nothing in the economic calendar that could move the markets on Monday and Tuesday, and the markets are going to be on US-Iran news and on technicals, and technicals here are saying that there could be a bounce after this spring. No bounce and some other gap down, especially like this, like true gap down, and you can bet that we are going to see these lower highs in that case very quickly. I would prefer to get a bounce first, and then from the position of lower high to aim down again toward this, which is now weekly low, and that weekly low is at 23,343 toward the weekly low and below, because now we have to see close below March double top and also close below this weekly low to expect some more downside to come. So that would be it for this edition of the bigger picture videos, and in the next video I'm going to go through a price section of Friday and review of this week.